Parvat, great to have you on the show. Thank you so much for your time. Firstly, tell us about this 386 crore rupee order from Bloom Energy. And, we understand it's an existing international customer, and you were expecting orders to go up 25% in FY27 from Bloom. Any more such projects which would be in the offing?
No, this is the order which we received for the first 6 months of the calendar year in 2026. So a similar trend would follow for the rest of the year. So that's what we are expecting. And moving forward as well, we expect the growth happening in this particular sector because of the demand from the data centers and various other projects that Bloom is handling. So it's going in the right direction as far as we are concerned. And it's really exciting to see this kind of growth happening after putting efforts for almost close to 10 years in this particular field.
Oh, yeah, absolutely. So what is then the vision for the clean energy segment? Because that now makes up for a significant portion of your order book.
Yeah, it's going to be a significant portion of our revenues as well because it's going very rampant right now. We are doing pretty well in terms of absolute numbers in other segments as well, in aerospace and space, defense, and other sectors in nuclear as well. But obviously, we are in multi-segmental company basically. But clean energy is really moving pretty fast, and we are pretty excited about it.
And Mr. Reddy, also help us understand, while Bloom is an existing international customer, what's your current export strategy, especially with respect to EU partnership opportunities? And also, how do you see US tariffs impacting your business? Any change, any diversifications that you're making there?
See, US tariffs, I guess, 50% is a way too high. Probably government of India and the US government would resolve those issues. But we are a technology-based company, and the entry barriers are very tough, and we worked on this technology for more than 10 years. So the orders which are flowing in is just a proof that technology will still hold itself. It's not a commodity as such. So yes, we definitely 50% tariff is a burden for the customer, and also it's deterrent. But because it's a technology-based product and we have worked for so many years on this, the entry barriers are tough. The capacity installation to set up the capacities are also take a pretty long time. So we are hoping overall the tariff should come down, hopefully, over the next 2-3 months. But we will not be affected in terms of the tariffs at this point of time. And hopefully the government of India will also intervene and see what best they can do about this.
Right. Just this weekend, the government also cleared the new Defence Procurement Manual 2025. How is it that you see this new manual directly impacting MTAR's defence and aerospace order pipeline as well as profitability thereof?
See, there are a number of aspects to it. One is the domestic market, what we're looking at, but we are also very strong in the export markets in other countries as well. It's not necessarily United States, but also in Europe and Israel and a lot of other countries as well. So we are well diversified in our export portfolio in terms of aerospace business, what we are doing, and the defense business as well. So we are obviously focusing on our domestic projects, what we have undertaken and what we are going to undertake. So this company was started basically to indigenize the technology many years back, about 55 years back. We continue to do that. We have done that for nuclear. We've done a lot of projects for defense. We will continue to do that, and it's a good thing that becoming self-reliant is the most important thing. And MTAR is one of the companies which has worked in the past as well in space, nuclear, and defense as well in the indigenization programs. And we have successfully done it in various projects.
Okay, and Mr. Reddy, apart from clean energy, what is the latest update on your order pipeline in the core defense and aerospace segments? Any significant contracts in the work with ISRO or the Defense Ministry?
Absolutely. We are expecting a lot of orders from space as well, nuclear as well. As I said earlier, we can expect close to, more than close to 700 to 1,000 crores of orders kicking in over the next 3 to 6 months from these segments as well. So by the end of the year, we'll find the order book very strong compared to last year. And moving forward as well, we are diversifying into various other fields. So we expect the order book to grow year-on-year basis.
And speaking about your financials, while your order book is strong, there's been some volatility in the quarterly revenues and profit as well. What's the strategy, Mr. Reddy, to try and ensure a more consistent and timely conversion of your orders and, thereby reflect on your revenue as well as profitability?
See, MTAR is an engineering company. You really don't go based on quarterly results. It goes based on annual results. And we also invest a lot for the future growth of the company. So if you look at the situation today, if you have received an order for like 400 crores or whatever, close to 400 crores for executing in 6 months, this is the lot of R&D and work which we have done over the years. And the investors would see the benefit moving forward in terms of the growth of what company can achieve. It's not about one particular quarter or one particular year, but we have what you don't see in the balance sheet is a kind of innovation and the R&D, the kind of work we have done to ensure that the growth of the company is very strong moving forward over the next 5 years.
Okay, and with the new orders, what is your expected margin profile for the coming fiscal years? If you could help us with a ballpark figure there.
The margin profile is obviously based on the kind of revenues we generate, and obviously the revenues are going to be much higher next year. So margins are going to improve. I can't quantify it at this point of time. It's too premature, but obviously we will go back to our original margin step by step, but it will definitely improve based on the improved revenues that we're going to generate based on all these orders that we're going to execute over a shorter period of time.
And, since you do have such a large order book, Mr. Reddy, and most are long-term contracts, there's capital expenditure, capital capacity expansion as well, which is on the cards. Tell me, how is it that you're going to be funding all of this?
No, we have been having operating cash flow positive. We are pretty strong in that. As far as we are concerned, our debt also is pretty low, and we have enough internal accruals to take care of this. We might go in for a little bit of debt, doesn't really matter because we have enough leverage out there to do it. So we are self-sufficient in terms of taking care of all this because we are having a strong operating cash flow positive. That's what we have seen last year, I think close to what 115 to 120 crores. So moving forward as well, we'll have a very strong operating cash flow positive to handle all these requirements.
Great to hear that, Mr. Reddy, and thank you so much for your time today. Good speaking with you.
Thank you.